So are you willing to take this challenge of Ind AS 12 MCQs? So let us see how many of you can get these answers right. First come to Ind AS 12 MCQs. Question number 1. Ind AS 12 MCQ question number 1. Let us test your knowledge of Ind AS 12. Important question number 1. A subsidiary has sold goods costing $1.2 million to its parent for $1.4 million. All of the inventory is held by the parent at the year end. All the inventory is held by the parent at the year end. The subsidiary is 80% owned and the parent and subsidiary operate in different tax jurisdiction. The parent pays taxation at the rate 30% and the subsidiary pays taxation at the rate 30%. Calculate any deferred tax asset that arises on the sale of the inventory from the subsidiary to the parent. Now the student will have to answer what will be deferred tax asset. What will be deferred tax asset? And in consolidated financial statement, what would be the deferred tax asset? Show your skill on Ind AS 12. Show your skill on Ind AS 12. Okay, time over. Let us see how to do it. What is the unrealized profit? Unrealized profit is 0.2 million. 1.40 minus 1.2, 0.2 million, or you can say 2 lakhs multiplied by tax rate 30%. So the answer is $60,000. The answer would be $60,000. This 80% owned is not important. The unrealized profit on stock is 2 lakh. Deferred tax asset will be created on 2 lakh, that is coming to 60,000. So if you want to write the working note for this, maybe you can write, if you want, 2 lakh into 30%. 2 lakh into 30%, $60,000. Answer is A. Answer is A. Let us come to question number 2. Again test your skill. An entity issued a convertible bond on 1st January 2004 that matures in 5 years. The bond can be converted into ordinary share at any time. The entity has calculated that the liability and equity component of the bond are $3 million for the liability component and $1 million for the equity component. So this is a compound instrument and they have bifurcated the total proceeds into liability and equity component as 3 million and 1 million, giving a total amount of bond 4 million. Interest rate on the bond is 6% and the local tax legislation allows a tax deduction for the interest paid in cash. Calculate the deferred tax liability arising on the bond as at the year end, as at the year ending 31st December 2004. As at the year ending 31st December 2004, the local tax rate is 30%. The local tax rate is 30%. The local tax rate is 30%. So my question is, what will be deferred tax liability in this example based on the details provided to us? Deferred tax liability in this example based on details provided to us. Your carrying amount of the liability is 3 carrying amount of the liability is 3, the tax base will be 4. Tax base will be 4. Carrying amount of liability is less than tax base 4 because income tax law does not distinguish between equity component and the liability component. For them it is a debt instrument worth 4 million. So therefore there is a difference of 1, TTD, taxable temporary difference of 1 million into 30% tax rate, and the answer would be $3 lakh. If you want to write the working for this, you can. The answer is $3 lakh. Very good. Very good. Those who have answered correctly, good. You have understood this chapter. $3 lakh write down, and the brief calculation you can write is 1 million into 30%. 1 million into 30% is 3 lakh. Okay. Now we'll come to question number 3. An entity has revalued the property and has recognized the increase in the revaluation reserve in its financial statement. The carrying value of the property was 8 million and the revalued amount was $10 million. So my carrying amount has become 10 now and the tax base was 6 million. So taxable temporary difference will be 4. Okay. Now it says in the country the tax rate applicable to the profit is 35% and the tax rate applicable to profit made on sale of property is 30%. Where will the tax liability be recognized and at what amount? Where will the tax liability be recognized and at what amount? Where will the tax liability be recognized and at what amount? Now we have two tax rate. Which rate we will take? We will assume that the objective is to sell the asset. If the objective is to sell the asset, we will apply 30%. But yes, this question can have one more answer. If the objective is to use the asset, we will apply 35%. Question is not fully clear on that front. So that comes to 1.2. And because it is because of revaluation, because it is due to revaluation, we are going to adjust in OCI. We are going to adjust in OCI. So only one answer is 1.20. Only one answer is 1.20. If I take 35%, the answer will be 1.40. But then it is saying it will be recognized in the statement of income and expense. Because the difference is due to revaluation, we have to take the deferred tax liability into OCI. So you write in bracket OCI and tick mark option B and write this calculation if you want. Okay. So 1.2, 10 minus 6 into 30%. One more question. The current liability of an entity includes fines and penalties for environmental damage. The fines and penalties are 10 million. The fines and penalties are not deductible for tax purpose. Fines and penalties are not deductible for tax purpose means they do not have future tax consequence. They do not have future tax consequence. And if an item does not have future tax consequence, what is the tax base? If an item does not have future tax consequence, what is the tax base? If an item does not have future tax consequence, the tax base is equal to carrying amount. So the answer is 10 million. So that there is no difference. So that there is no difference. If I take any other figure, difference will arise. and if difference will arise, I will have to create deferred tax. So to ensure no difference, keep the tax base also same. Okay, so the answer is A. The answer was A. Tick mark A, tax base will be same and therefore there is no difference. So these were some important questions on Ind AS 12. I would request you to join or subscribe our YouTube channel AS Foundation. Also share with your friends so that we can reach to maximum number of students. All MCQs on all chapters we are uploading, and we will upload more in the days and months to come. Thank you very much.